Wall Street is a place where those with the least intelligence and those with the greatest intelligence can be found in equal measure. It is a place where a person in possession of a doctorate in quantum physics and an individual with a penchant for consuming crayons can coalesce and be unified by one inviolable truth. The present situation is such that the general public is unaware of the events that are unfolding. The purpose of today's discourse is to provide a comprehensive overview of the 6 distinct categories of investors that are present on Wall Street. It is appropriate to initiate this discussion with a focus on Warren Buffett's disciples, or more specifically, value investors. He is the archetypal individual who possesses a collection of khakis in various shades of beige, partakes in lukewarm coffee, and engages with light erotica as a form of intellectual stimulation. It could be argued that he is the most dynamic and engaging individual in the group. He is an incessant and unrelenting discourse on the subjects of moats, intrinsic value, and compound growth. It is estimated that the subject will dedicate a total of 400 hours to the analysis of a company's 10K documentation. However, when queried about his year-to-date returns, he asserts that his investment strategy is oriented towards the long term. Translation: since the Bush administration, there has been a marked underperformance. Furthermore, it is interesting to note that the male subject in question appears to be averse to experimenting with alternative sexual positions, with the exception of the missionary position. The value investor can be considered analogous to observing paint dry. The subject's portfolio comprises 3 meme stocks, a forex trading course, and a pending DUI. Every morning, the subject starts the day with a cold plunge, a David Goggins podcast, and a period of meditation. However, in reality, he is merely expressing his desire to have been present on Wall Street during the 1990s. In his room, there is a poster of Hustle Harder, 3 empty cans of Red Bull, and a quantity of a white powdery substance on his nightstand. He embodies the archetype of an individual whom one would prefer not to encounter in a grocery store setting. Upon soliciting his insights on his investment strategy, he is likely to respond with the assertion that the most prudent investment is in one's own capabilities. He self-identifies as an entrepreneur. However, the concept of diversified income streams encompasses sports betting, crypto meme coins, and the imposition of a $20 entry fee for attendance at his social gatherings. It is reasonable to infer that he is not attempting to outperform the market. It is evident that his primary objective is to surpass the performance of his subordinates. This is the type of person who examines a stock chart in the same way that conspiracy theorists interpret grainy UFO footage. The individual in question has a total of 12 monitors at his disposal, perceives the presence of bull flags in his morning coffee, and communicates in a language comprehensible only to a select few. He asserts that each candlestick possesses its own unique narrative. He is indifferent to the actions of commercial entities. It is evident that he is unaware of this fact. This is because the fundamentals are for those who are of a certain age and therefore not able to accept new ideas. It is evident that he does not engage in the requisite level of due diligence. He engages in artistic production. It is evident that the individual in question does not hold Warren Buffett in high regard, rather, his admiration is directed towards Pablo Picasso. However, it would be unwise to disparage his charts, as it is well documented that interrupting an artist during the creation process is considered poor form. This individual has demonstrated a remarkable ability to transform a modest initial investment of $400 into a substantial return of $13,000, only to subsequently experience a reversal of this gain, leaving him with a net loss. He refers to himself as an early bird, yet his actions suggest a state of unemployment and a preoccupation with discord that may be detrimental to his well-being. He experienced a significant financial loss as a result of investing in a digital currency known as Fartcoin, which subsequently proved to be a fraudulent scheme. However, he has chosen to regard this as a valuable learning experience. The subject currently possesses 12 non-fungible tokens, NFTs, representing animals with a pixelated style, and has chosen to reside in a van in order to live an off-grid lifestyle. Furthermore, the subject has made the assertion that fiat currency is a scam, while still utilizing his mother's Venmo account for financial transactions. It is evident that the individual in question has not submitted tax returns since 2021. However, this is of negligible significance due to the nature of blockchain technology, which is characterized by its borderless nature. The individual in question allocates a significant portion of his time, approximately 8 hours per day, to engaging in discourse on the subject of the future of finance within the context of Twitter Spaces, a platform that caters to a demographic of 14-year-olds. However, it is evident that he lacks a comprehensive understanding of the intricacies of blockchain technology, Web3, and related concepts. He merely favors the use of complex vocabulary that is not readily comprehensible to the general populace. He has a propensity for options, holds a profound respect for an individual known as Roaring Kitty, and adheres to a singular investment philosophy. The subject consumes Monster energy drinks and fast food such as Hot Pockets, and has not been outside for a considerable period since the peak of GameStop in 2021. He has been known to refer to Warren Buffett in a disparaging manner, perceiving his actions as indicative of a lack of boldness. Furthermore, he has expressed the opinion that a 40% decline in market value can be considered a mere consolidation of existing trends. In addition, he has been known to liken trading losses to the metaphorical scars that one might endure in the course of a physical conflict. The individual in question has never been acquainted with the concept of a Roth IRA. His long-term strategy for the accumulation of wealth across multiple generations entails a substantial investment in weekly SPY calls, subsequently attributing the decline in value of these investments to market manipulation upon their expiration. It is evident that the individual in question does not engage in technical analysis. It is evident that he has never perused an earnings report. The subject simply intuits matters, and this ability is sufficient for him. He remains unperturbed. He resides in Excel. Furthermore, the author employs the term bubble to describe all asset classes, including those that are not tradable. The subject has been observed to move throughout his apartment wearing socks and speaking in a monotonous voice about synthetic CDOs and the collapse of Western finance. Following the viewing of The Big Short, the individual in question has experienced a state of perpetual agitation. The film was not merely a cinematic work to him, it was a profound source of inspiration. This experience can be considered a spiritual awakening. Despite having been incorrect on 137 consecutive occasions, his response to this is invariably one day. It is inevitable that the market will eventually experience a decline. Ultimately, however, the inevitable exposure of the Fed's actions is likely to occur. The evidence will be made available to the public in due course. The subject is currently experiencing a deficiency in the market, the economy, and hope. It is evident that his motivations extend beyond mere financial gain. He desires to observe the combustion of the world, in order to subsequently take his place amidst the residual embers, where he will intone, "I foretold this eventuality." Until such a time as the aforementioned event occurs, the subject will be located in his domestic residence, in the company of water jugs, tinned beans, and Q1 earnings reports from 2012. Thus, what conclusions may be deduced from this analysis? Notwithstanding, no evidence has been found to support this hypothesis. Regardless of whether one interprets Warren Buffett's annual letters with the fervor of a devotee or engages in speculative trading with the financial resources equivalent to one's monthly rent, the underlying principle remains consistent with a unifying truth. It is unclear what is occurring.